Today marks a crucial point in history. Just yesterday, the IMF in Davos, Switzerland, declared that the global economy is heading toward the worst economic storm since World War II. That's a sobering prediction. Yet, depending on your perspective, this could be either bad news or surprisingly very good news. We're facing an economic climate unlike anything we've seen before, and I believe many people are interpreting it incorrectly. Let's take a brief look back at history, and I'll explain why I'm concerned. World War II was a fascinating period for the global economy. After the war, the world was left with broken supply chains, and people returned home, hungry to consume again. This surge in demand with no supply to meet it led inflation to skyrocket to 13%, or perhaps even higher. Interest rates followed suit, but the result was an immediate recession. Prices rose, but wages couldn't keep up, leading to a collapse. Sound familiar? It's a classic economic cycle that we've seen before. The next major parallel came in 1974, when the Arab oil embargo sent oil prices soaring and inflation skyrocketed. The economy plunged, with the stock market dropping by 50%. The ISM survey, a reliable business cycle indicator, dropped to 30, the lowest point in history, all within just 4 months. The setup then mirrors the current environment: soaring oil prices, rising inflation, and tightening monetary conditions. But just like in the 1970s, inflation eventually came down. It wasn't a permanent fixture. Fast forward to 1984, and we saw similar tensions. High inflation, a strong dollar, and increasing interest rates sparked fears of repeating the 1970s crisis. However, the economy didn't collapse. The Federal Reserve's quick actions to adjust rates helped avoid a full-blown recession. This was followed by the Plaza Accord in 1985, where countries worked together to prevent further damage from the rising dollar. A more recent comparison is 2008, when high oil prices and inflation led to a housing market crash. Fast forward to 2018, and the same issues, rising oil prices and inflation, caused a slowdown. So why does this keep happening? The truth is that when we tighten monetary conditions, consumption falls. Higher mortgage rates make borrowing more expensive. Wages haven't kept up with inflation, and people simply can't afford to consume as much. The tightening has already begun, and its effects are clear. Major tech companies, once seen as invincible, are now laying off workers and issuing earnings warnings. Amazon, for example, admitted to overhiring, and layoffs are spreading across industries. The market is adjusting, and something is bound to break. It may not be a bank or a hedge fund, but the economy itself. The system has broken, and the Fed will eventually have to shift its policies. One of the most significant issues is the Fed's balance sheet. When the central bank prints money, it decreases the purchasing power of the dollar. This devaluation creates a false sense of prosperity. Stocks, real estate, and gold may rise, but they're simply reflecting the weakening of the currency. However, there is a potential silver lining. While the economy may face a tough few months, if the Fed pivots and adopts a more accommodative stance, we could enter a period of recovery. Think back to the post-World War II era. After the economic collapse, the U.S. experienced a massive economic boom driven by fiscal stimulus and technological advancements. The same could happen now, though it won't be without challenges. Ultimately, we're in a period of major transition. While it may feel like the end of an era, just as it did in 1948, we may be on the cusp of something very different. A reset. This could be the start of a new phase of prosperity, even if the road to get there is rocky. It's essential to understand that economic cycles like the rise and fall of empires are inevitable. What's crucial is how we adapt. The key question now is, will the Fed continue to print money to stave off a deeper recession, or will it allow the market to correct naturally? This is a critical moment, and the choices made will shape the future of the global economy.